I tell you, it's Europe is suffering from this war, and their economies are going to continue to sink. China's getting hurt by this, not the United States, according to recent data, and we are the oil and energy dominant country in the world. Let's talk about this with Dan Brouillette, former U.S. Energy Secretary, Art Laffer, former Reagan economist, Steve Moore, host of More Money on WABC Radio. Dan Brouillette, we're going to put a chart up on the full screen. It was in the Prosperity Hotline today, if it's the same chart. I think it is, yeah. We basically have gone from roughly 5 million barrels of oil per day in the 1980s, okay? Saudi Arabia at that point, I think, brought prices down to $8 or $10. And today we're producing 13.6 million barrels a day. We are net exporters of energy. We are the LNG power of the world. Europe, being dumb as Europeans always are, didn't want to play with us. Okay, they're suffering. China is suffering because of the Strait of Hormuz. And anyway, they're not doing enough business with our energy and LNG. The LNG story, the natural gas story, the oil story is making us even more the dominant economic player in the world.
Absolutely right, Larry. Couldn't be more true. It's a great chart. And it speaks to the innovation. It speaks to the experience, the capabilities, I should say, of the U.S. oil and gas industry. They developed hydraulic fracturing. They've developed technologies now that not only allow us to pull it out of the ground more efficiently, we can find it. We know where it is now. We couldn't see it 25 years ago, 30 years ago, 40 years ago. Now we can, and we can actually get to it. And Larry, you just pointed out, there is no better proof point on energy dominance than to look at natural gas pricing today. $3 at Henry Hub, roughly $15 in Europe.
Yeah.
It is amazing the differences here that we're seeing in the marketplace.
Hadn't moved. That natural gas, $3, hadn't moved, except it falls below it occasionally. And, you know, Europe, hook, line, and sinker, Europe went after the Green New Deal scam, okay? That's what Britain did, and Norway. There's so much oil in the North Sea, they didn't want to touch it. And meanwhile, their biggest importer was Russia. How's that turning out for you? I mean, how dumb are the Europeans? But once again, it makes the United States so much more dominant.
So much more dominant. And Larry, you know, as we watch what's happening today in Iran and around the world, look, if we want to make the Strait of Hormuz irrelevant, let's increase our production here in the United States. Importantly, Larry, let's build the infrastructure that's necessary to get those products to market. More pipeline capacity, more export capacity. DOE has authorizations right now that they could be approving. Let's approve them and get them out the door. Let's let this industry build. And if we're going to talk about energy production, let's remember how dependent it is on capital. Long-term capital. These are capital-intensive industries. Capital gains cut today might be a good thing.
Oh, capital gains cut is in the Kudlow economic plan, which Steve Forbes wrote about, thankfully, in Forbes Economic. We got to get the supplemental for 200. I'm coming to you, Steve Moore. We need to cut the capital gains inflation adjustment. That's one thing. We probably should lower the marginal tax rates, at least for the middle income brackets. We got to pass the supplemental. We got to pass the Voter ID Act. We got to reopen DHS and finance ICE and so forth. The only way you're going to do it is through a reconciliation bill. I don't want to get bogged down in it, but it's 50 votes plus the VEEP. You'll never get 60 votes. We got to go for it. And if they do it, Steve, we have to put the pressure on the budget committees, you and I and Arthur and everybody else, because they should put some pro-growth tax reform in there.
Yeah, no question. By the way, I just want to go back to one thing you were talking about with Dan and the Europeans. I was doing the BBC show early this morning, and what they were talking about, Dan, you're not going to believe this. They're saying, oh, well, this proves we can't use oil and gas. We're going to have to go back to wind and solar power. I'm like, are you people crazy? I mean, you've totally deindustrialized your whole continent.
Why would you do BBC? Why would you do BBC? It's far left,
Well, I
man.
thought maybe I could get through to these people.
They're in cahoots with The Economist. The Economist thinks we're losing the war. I'm sorry. Go ahead.
Yeah, but they want to use energy that's twice as expensive as ours. And by the way, it's one of the reasons we are the dominant country, not just in terms of energy, but in terms of production, because of this energy revolution. And just want to salute my friend Harold Hamm, who was one of the guys who invented this whole new shale revolution. Now, I'm in total agreement with you. If we're going to do this new reconciliation bill, let's do indexing of capital gains for inflation. Let's do all the things you were talking about, and let's pay for it. I don't know, Arthur, what you think about this one, but a 15% surcharge tax on these $1 trillion of university endowments. How about that?
Oh, jeez.
I would love to see us get rid. I'd love to see us get rid of the exemptions there for universities.
That's
I mean,
right.
501c3s,
That's
universities
right.
should be gone. Do you realize, Larry, we could have a 100% pay for of getting rid of the income tax entirely just by eliminating the deductibility of 501c3 contributions and the non-tax payment of 501c3 payments only for those 501c3s $50 million or larger. It could take care of the income tax completely and give you your capital gains tax. We would be a tax-free country, except for a few states that are really weird. And we could do that, and it would be just wonderful.
What about, for heaven's sakes, there's $100 billion of fraud already found in California. But wait a second. I was listening to Mehmet Oz the other day on Bret Baier. Not California in its entirety, just Los Angeles. There's $100 billion of fraud in various Medicare programs and hospice programs. And this is the whole, the Elon Musk campaign may be coming back. J.D. Vance is the, lead fraud hunter. There's probably $500 billion, according to the GAO, to finance tax cuts as well as all these other matters. And Arthur, you look at, we are creating private sector jobs left and right. You see those numbers, 186,000 private sector jobs. We're losing federal sector jobs by close to 400,000 federal sector jobs in the last year have been lost. So let me ask you something. If the private sector is growing and the federal sector is shrinking, what does that mean, Arthur?
That means good prosperity is just around the corner, to be honest. What you do see is that amazing on this, Larry, and if I can repeat myself, forgive me, we have gone from population growth in the preceding period up until Trump came in of about 6.4, 6.5 million population growth. The latest numbers are about 2 million population growth. All of that means we're facing these headwinds in the employment area and all of it. And in spite of that, Larry, the U.S. economy is doing really well in jobs. What we're doing is replacing jobs from illegals who left the country by domestics now, and that's a huge, huge deal. Trump should take a real lap, and that and the Iran war, I think, are just absolutely spectacular things Trump done.
Net immigration is negative. Net is self-deportation.
It's negative, and that's a big deal
getting
for
rid of
jobs.
the criminals, and it's 4.3% unemployment rate. Dan Brouillette, we're at 13.6 million barrels. I don't know why we can't get to 14 or 15 million. Now, a lot of this has to do with deregulation and permitting. I get that. But also the break-even price is a lot lower than many people in the oil patch will tell you. And as I said in the opening riff, I had dinner with a senior executive of a very, very big oil company. They can make money at $35 a barrel, $35 a barrel. So if you get back to $60 a barrel or $70 a barrel, you can produce a lot more oil and gas, can't we?
Yes, I think we can, Larry. There's no question about that. I don't know what the actual number is. It might be 35, maybe it is. I think it's probably a little higher than that if I had to guess today.
Go 40. What the hell?
40, what the hell?
Still cheap. It's still cheap.
It's still cheap. We're still making money. But look, I think, Larry, the point here again is to get back to this capital gains tax cut. It's very important that that capital be incentivized to go to work.
Yeah.
And that's what we can do, I think, in the very near term.
Yeah.
If I think back, Art was part and parcel to this, and I applaud his good work back in the day. That tax cut that Reagan initiated was clearly the spark that got that economy going, but it was cheap domestic energy that was the fuel for the rest of that economy.
Don't humor him, Dan. Dan, don't humor him.
And he got that because of deregulation.
I got to get out of here before Dan praises him even more. Dan Brouillette, thank you ever so much. Art Laffer, you deserve the praise. Steve Moore, thank you.